The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. I'm your host, Alex Pang, along with Alex Shanks. Alex, how was your Christmas holiday?
It was good, man. I'm not going to lie. I wasn't really ready to come back. I'd rather still be hanging out on the mountain, snowboarding, hanging out, having some nice warm coffees with the little Baileys in the morning and all that good stuff.
Yeah, Christmas is usually a time for me to catch up on my video games because my wife and I, we watch a lot of TV and we take turns picking shows. And then we have this not unwritten rule, but like in between shows, we don't want to jump into another show right away. And I said to my wife, can I play some PlayStation for a little bit? She's like, yeah, go for it. So the game I'm playing right now is God of War. So it's a God of War.
I used to play it.
Yeah, God of War Ragnarok.
I used to play it a lot.
I finished the storyline, but maybe it's that OCD nature of me, but I want to get 100% completion. So all the collectibles, all the side missions, everything. So a lot of times the side mission part, all that stuff, it takes longer than the actual game itself. So I want to get full value on the game.
Yeah, see, I can't do the side mission. That's what I liked about God of War when it first came out. It was very straight line. Boom. This is all you got to do. And I love that. I don't like the games, the world games where you get to travel over here. My brain's just, no, I want to focus on one thing.
Yeah, oftentimes I don't do any of the side missions until I finish the main storyline. I do that with Tomb Raider, even Grand Theft Auto, and Prince of Persia, all those other like the story-based games, which give you the side quests and stuff. I do that after the game's over. Spider-Man too. So that's why I get full value for the game. So honestly, a lot of times I only play like 2 games a year. And the rest is
this comes at Christmas time. I'm gonna be next week. I'm gonna be loading up. I got Lego. That's what I asked for Christmas, and I got a Star Wars one, an Avengers one, and I'm going to. That background's gonna be changing to a Lego background. That's my new thing doing.
Yeah, there was a Star Wars game that's really good. I think it's the Fallen Jedi or the Last Jedi.
Yep.
The game is not easy. I've actually had to turn down the difficulty to easy, and even at easy. It's not that easy. Like some bosses are so hard. I use YouTube and like it looks great on YouTube. The guy just kills them easy, but I can't replicate what they're doing because I'm usually like trigger happy or I'm too quick on the button pushing. I dodge too quick and I have to time it perfectly. So a lot of practice, a lot of button smashing.
No, that's what I like. I like about Christmas, the holidays is for one, like playing games and stuff. We played some Mario Kart with my younger kids, and then like even just playing board games. Doing that stuff, I feel like it's a lot easier to do at the holidays.
Yeah, especially when there's no pressure with our work schedule because magically things have slowed down. You want to spend time with family. And then, of course, you want to take back some me time too. And me time, I guess, Alex, you and I are gamers. We'll always be gamers.
Yeah, I used to be that. I haven't played too much, but gaming used to be a big thing that I did. It's I'm getting to do more of it now as my son gets older again, which is exciting.
Yeah, it brings back the little kid in us. They're like, oh, hey, I'm playing games with the little one, and oftentimes you're much better than your kids, so they end up just watching you play. They're like, oh, hey, can you do that? So it's fun times.
I let my son beat me once on Mario Kart, and then from there I'm better than you. I'm like, you're getting crushed every single round from now on. I'm gonna lap.
Yeah, we don't want to have this entitlement mentality, man.
Yeah,
is it suck to lose? Yeah. How do you get rid of that feeling? You get better. Yeah. So you're not gonna. Yeah. It's like teaching them about life. There's nothing's gonna be handed to you.
Yeah. Let's dive into it, Alex, because we had to take some time off, everyone, for it. And there was a lot of news. I know both Alex and I were itching to actually jump on and be like, holy shit, we need to talk about this stuff. And so we got major breaking news that happened yesterday. And then we're going to work backwards because there's a lot of stuff that happened during the holidays as well.
Yeah, exactly. We have this kind of working document for the viewers out there, just taking you a little back behind the scenes, what we do. We have an agenda, what we talk about. And over the course of a week, things come up and we place it on the agenda. So that's what we talk about. Guess what happened yesterday? So today's a Tuesday that we're recording. Guess what happened yesterday? Justin Trudeau finally did what everyone was hoping or anticipating he'd do. He resigned and he suspended Parliament till March 24th until the Liberals find a new leader. So He's not officially gone yet, so he's still in place. But this has been brewing for the last few months.
Yeah. Tell me, what's your thought on this prorogue? I personally, I just think it's BS. It's, hey, we've already been held up Parliament. Even like JT said, hey, we've had a horrible Parliament because we've been a minority government. Guys, we all have to come together more in the middle. We can't say, hey, we only going to do what you want to do. They've all been trying to do only one thing and get themselves. And so doing this is scary. We have tariffs coming in. We have all these other things, and they can't even meet our people that we put in power aren't even going to be able to meet.
This goes to show that they're really serving themselves. They're not really serving the Canadian public, who, like the constituents, like you and I, the people we voted in to serve us, serve the country. They're not serving the country right now. And essentially, we have no government to battle, to deal with Trump coming into power and the tariffs are coming. Like, for the rest of the world, we're a laughing stock.
Oh, the one great thing is our dollar, as soon as yesterday when it happened, our dollar went up instantly.
Yeah.
And that's pretty sad to see that everyone's, okay, we're going to start investing back into Canada because we believe it again.
It goes to show with the Trudeau government over the last 9 years, it's slowly turned Canada into a joke. And I've never in my life ever felt I was embarrassed to be a Canadian until maybe the last 3 to 6 months. We've just become like the laughing stock of the world. And not to say anything that Justin Trudeau is a bad person. I'm sure he's a fine human being and he served the country. It's just that his policies the government put in place has been terrible and it's destroyed the country.
And they just flip flop. They'll do something and then they're like, oh, we're going to go backwards. I just feel like they haven't listened to people. Now I'll bring up the one thing, and I don't know if you saw it during the holidays, Alex. The one thing that I really found just disgusting, which scares me as Canadians, is when Justin Trudeau was out with his family, they're on ski mountains. I don't like that. Hey, you took over the mountain with a security team and stuff. Like, hey, that's fair to complain about that. But the way that people were like talking to him out in public with his kids and around, that's just, to me, very embarrassing. I do not like the guy. That's perfectly fine, but I would never say that stuff in front of his kids. It's sad to see that.
Yeah, it is sad. It's come down to it where, like we talked about it in previous pods, that Justin Trudeau probably, when you stack up history, one of the worst prime ministers in our history, and it boiled over into the public when someone actually went out of the way to have the kahunas to go up to them to spew vitriol to them. So I wouldn't do it, but someone else did, and yeah, that's not cool.
Yeah, and it's so hard because you get people that complain saying, hey, you're a keyboard warrior, you're only saying that on the keyboard, you would never say that to him in person. And some people are. I just think there's a time and place for it. And maybe it'd be nice, maybe we could have more of a community thing where we get to voice our opinions in a better way. We don't get to do that. We put people in power. They don't even listen to us. I saw something about an NDP person in, I think, Burnaby maybe, that blocks people on Twitter for if they say stuff that they don't believe in. And I'm like, you are in power. You have to listen to everyone. You may not like what everyone says, but you have to listen to all of it.
Yeah. There needs to be change in place. Even with Trudeau stepping down, and nothing is really going to happen until we have an election. And whoever the Liberals choose as their new leader, whether it be Mark Carney, Chrystia Phelan, Christy Clark, or even Melanie Joy, whoever it is, they're just going to be a lame duck PM. And we know they're just going to be the official opposition leader once we have an election. I wouldn't even put my name in the hat for that right now. I would say I want to wait to see what happens. Then I'll start talking about it. I saw there was a poll for Canadians saying, who would you want to be the leader of the Liberal Party? Everyone voted for none of the people above. Yeah. I think you hear all the other parties come out and be like, you know what, that's great, but nothing's going to change until we have an election. Call an election and let's see some real change. And I feel the same way too. Thankfully, yes, JT has resigned, but nothing is really going to move until we have an election, a change in government. Right now, it's really just shuffling the deck chairs, and we're in a holding pattern until then. Yeah. And that's right. The big news that really spurred a lot of this was just before the holidays. We got Chrystia Freeland. Now, the first person that actually resigned was Sean Fraser, the housing minister.
He resigned just before the holidays, and that was like, holy shit. Then Krista Freeland resigned, writing out a big letter, pretty much like calling out JT, because JT was like, hey, I don't want you here anymore. And it was the stuff that she wrote in the letter. It was like, holy shit. Okay. You guys have not been seeing eye to eye at all.
And then there was talk too that she didn't agree with even that the GST holiday and the gold 250 rebate checks. She didn't agree with too. Good on her. I guess at the time she wanted to distance herself from Justin Trudeau, and maybe speculation is, hey, she wants to be in the running for the Liberal leadership.
But it's so crazy that this was the day before the federal budget was meant to be released. Just insane that she's the one that's been running the budget, supposedly. Should it have been like, hey, you still have to be here? That got delayed. And we all know we're $60 billion over our budget. And we had a handrails at $40 billion. Mm-hmm. Like they knew that we were going to go over the budget, but we went over it by $20 billion.
Yeah. It was what a mess. And whole bunch of ministers this is go to show the lack of confidence of the Liberal Party, even within the Liberal Party, where 8 ministers have decided to step down or choose to not be reelected. So we have a new finance minister, Dominic LeBlanc, new housing minister, Nathaniel Erskine Smith, if I pronounce that correctly. I believe Nathaniel Erskine Smith does not have any housing or real estate experience. But apparently in politics, that doesn't matter.
We've seen that. That's everyone always says, oh, Pierre Poilievre doesn't have this stuff. The thing is, he is a lifelong politician. At least that's all he has been doing is politics. Now, Justin Trudeau, we know, was a drama teacher, went into the politics that way. What was Krista Freeland before? Like she didn't do anything with finances before.
Yeah.
It was completely different.
I don't know her history. But something that by proroguing government, essentially suspending parliament till March 24th, something that came down the pipeline was, do you remember this capital gains increase that the Liberal government brought in last year or proposed, was increasing the capital gains inclusion from 50% to 2/3 after 250 of a capital gain, which essentially is taxing.
In your personal name.
Yes, in your personal name, essentially taxing real estate investors. That's mainly the one. And all the businesses.
But the big one, Alex, is businesses, everything, if it's inside your business, it's automatically the 66% inclusion rate. And that's the one that people like. I'm honestly fine with the housing one. I'm like, hey, you know what? Okay, we got to push down on real estate investors. It's the business ones. It's people that have businesses. And if they want to do capital growth, they're going to get taxed at 66% inclusion rate.
Yeah. And basically what they're saying is, we don't want you to grow your business in Canada. So it's essentially saying, what's the point of investing and building a business in Canada? And that's why we would suffer a lot of the brain drain, like oftentimes we did in previous decades, but it's almost going to be returning. But by proroguing government, what it does is it essentially killed that capital gain change. So let me backtrack this a second. This bill wasn't actually voted in by government yet. It was proposed.
Yeah, it's still been.
But CRA has been enforcing it since the beginning. I'm like, why is that? This essentially kills it. And CRA is still collecting it based on the 2/3. So we'll see how that falls out. If
Who do you think they're going to be giving any of that money back? And what are people going to have to pay their accountants to say, hey, if that doesn't go through, I want my extra money back that was taxed. Now, the way that CRA, so people understand it, especially as a business owner, you have to pay your taxes ahead of time. They're looking at your income and you actually have to prepay your taxes. Now, if you do not prepay them, they charge you 10% interest rate. Now, if you prepay them over it, they only give you 4% back. And so it's, hey, we're going to charge you more if you don't pay us. But hey, if we take too much from you, we're only giving you less than 50% of it.
Yeah, of course. It works out in their favor. But yeah, that's an interesting note. More things will come out of it. Right now, it's still new. So I guess if you're in that kind of boat in terms of a capital gain situation, talk to your accountant whether to just do the 50% or 2/3, however to strategize.
And that's where, let's bring it back a little bit to talk about mortgages and real estate. Obviously, that's what we're here, but we got to talk about all this news. Now, I don't know about you, Alex, but we saw the loonie come up in Canada, which is great to see. But at the same time, bonds have actually been increasing. The reason why for this is it's the unstability. People do not know what's going to be happening in Canada right now. And I think that could put pressure on that. Maybe rates aren't going to keep coming down for the next little bit. I could see maybe even the Bank of Canada saying, hey, we need to see what's going on before we keep cutting interest rates here. So we have another meeting January 29th. Before I was leaning towards a rate cut. Now I'm like, oh shit, I don't know what's going to happen.
Yeah, thankfully Bank of Canada doesn't just look at political. They look at the main things about the economy, growth, the dollar, everything. Yeah, it was the news that kind of rocked the country yesterday. Over the coming days and weeks, things will finally settle down and be like, okay, so what now? What is this going to mean? Thankfully, Justin Trudeau is still in power, so who knows how it's going to work out with Trump and stuff? Is Trump even going to treat him seriously and stuff? So we'll see how it unfolds in the coming weeks.
Yeah, it's and that's what we've always been telling people. Hey, it's not going to be a straight line down. It's going to be a bumpy ride. It's just looking at your numbers, getting prepared. I was even going back at some other ones. I have a mortgage that's closing next week for someone. They got a conventional mortgage under 4%. We know, Alex, right now, the conventional mortgage on a 3-year term, it's more like 4.5% now. And that is because we were going down and everything that happened in the US, bonds started going up, and that means fixed rate mortgages go up.
Yeah, the trend is still, we'll talk about it later about forecasts, but yeah, the trend is going down, but it's not a straight line down. It is bumpy. We're here to help you navigate along the way.
Yeah, exactly.
Yeah, so now we're going back in time now. After we just wanted to talk about this breaking news, what's going on. Chrystia Freeland resigned like right before having to give the full economic statement. I don't know who actually gave it, but I guess it was maybe the Dominic LeBlanc that gave it. But
yeah, I can't remember.
Yeah, I can't remember, but basically full economic statement. It was just summarizing what we've already talked about already. The stress test has been removed for insurable switches. So people coming up for renewal, if they want to change lenders, previously, if you want to change lenders to get a better deal, you had to get the stress test applied. So whatever rate it is, plus 2%, which kind of helped your existing lender or bank not give you the best deal because they know that you're going to have a hard time with maybe your life circumstance with stress test being higher. You have a hard time changing. And because there's no competition, why give you the best deal? So by removing this, it encourages more competition to get you a better deal, whether to stay with your existing lender or move. So you could just qualify at the actual rate, that contract rate on switches only. If your mortgage amount is the same, if your amortization is the same. Now, if you're looking to refinance over the last couple of years, maybe a lot of people have accumulated debt and wanting to refinance to consolidate, that this does not apply. So you would still have to, like if you're refinancing, taking more money and stuff, you would have to
fully qualify
stress test. Yep.
So that's where like the big difference for, I'll just say here is like for people to understand is like, let's say if you got a mortgage 3 years ago, you would have qualified at the stress test of 5.25 because rates were in 2-3%. And so it's not higher than that. But today we're qualifying at around 4%, which we have to qualify plus 2, which is 6%. And that's where we've actually gone above the stress test. When you got your mortgage, it was at 5.25. And so that's where some people, we can't qualify them if they had to get that stress test. So it's really nice to see when we can do this. Started to do a few of them. Super cool for people to say, hey, you actually took on a little bit more debt. Guess what? You qualified, no questions, because we're just doing it right at the contract.
Absolutely. Absolutely. So here's another thing that's industry related, but we're finally going to get a CRA income verification tool. Initially, they said early 2025. It'll probably be delayed till middle to the end of the year. Now, I'm pretty hopeful that even though if we get a change in government, that we'll still see this because
I really hope they don't change that. There's no reason not to. It does not benefit anyone. I personally believe the thing for this, so everyone knows, we personally used to have this as mortgage brokers. We could actually pull the tax documents. There's specific programs for it. That got removed from us. Even accountants, unless they do their taxes specifically, they can't pull the documents. And that is where mortgage fraud comes in, because someone could have someone doctor your notice of assessment, your T1, your T4. They make up fake employment letters. And this is how people that maybe make no income are qualifying for $1 million homes when really they should not be.
Yeah, I think this largely affected GTA and Lower Mainland for single family
Yeah.
homes. So maybe like from a bank perspective, they don't have the income, but maybe they do make the money, but banks
Yeah.
don't accept it. Like they have a lot of gig work, they're doing
Yeah.
DoorDash, Uber Eats, or
Well,
whatever, or
they're
have,
not claiming,
yeah,
they're
or
not
have
paying taxes on it.
exactly have homestay students. So
Yeah.
maybe from a reality, they are making the money, but the money cannot be counted from a
Yeah.
banking perspective. And
Yeah.
they've resorted to unscrupulous things about mortgage fraud, fake income documents, fake letters, and all that stuff to qualify. And it definitely is a small percentage of the mortgages out there, but it's enough that it's contributed to the unaffordability and people getting mortgages where they had no business getting one, and it created an unfair environment.
Yeah, and then you get them then complaining because maybe they bought something because they saw rents were so high, and then as they're complaining, it's you never could have afforded this. You showed higher income. I love helping people show how to save money on taxes. That is my favorite thing to do, but we have to use the right lenders to do this properly.
Yeah, exactly. And like in the States, we've talked about this before, the IRS has direct linkage with banks probably for the last 15, 20 years already. So it's already there.
Yep.
So it's
Oh,
not
yeah.
like this is new. Like we have the ability to do it. So just do it. This just creates
Yeah.
fairness in the marketplace and just removes fraud. For those of you out there that were perpetuating fraud, your days are coming to an end. We need fairness back into our marketplace. All right. So we'll see
Now,
that.
put my tinfoil hat on here, Alex. Do you think banks actually want this? Do you think banks are going to push back against this? We know the majority of mortgage fraud happens at the banking level. And I don't know. We know that they make money on it. So it's same as the way that they launder money for criminals and everything. I feel like they may be the ones that have the most pushback.
Yeah, I hope not. There's enough public pressure that's saying that we want this, that hopefully this will finally happen. We talked about this before. There was public consultations in our mortgage broker industry. I've already had my say. I'm sure you had your say as well.
Yep.
Hopefully this comes through, regardless of we change a government or not.
Yeah, to me, it'd be pretty silly if it didn't come through.
Here's another consultation that the Fall Economic Statement, I guess they're planning to start some consultations where maybe we should start changing our mortgage system to mirror that of the States, where consider having longer term fixed rate mortgages. Like in the States, it's not like these 1, 2, 3, 4, 5 year mortgages terms that we have, and then every few years we renew and then or move it around. In the States, it's either a 15-year mortgage or a 30-year mortgage, or really long term, and that's it.
20, yeah.
Yeah, and maybe Alex, a little bit more about it, the differences of the Canadian system and the US system.
Yeah, now this is where it's a weird point. It's so everyone is very upset because in the US, they had the 25, those 30-year mortgages when rates in the US, like people have rates at 2% for the next 30 years. Now, if we go back before that, on average, the Canadian mortgage rates have been lower than US, especially with the way our terms reset. And that's where it's a hard one. It's actually a really bad on the banking system. It's really hard for the US because they're banking on people moving every 7 years. And that is like when the collapse happened in 2008, 2009, that was because they had all these mortgages that people weren't actually doing stuff with, didn't have the income for them, and it puts a pressure on their banking system. Now, there's 5,000 banks in the US compared to what? We have maybe 200 in Canada if you add up all the credit unions. And that's where I can understand how people want it, but that's because they're looking at a backwards picture. They're looking at when rates were at 2% and, oh God, I wish I could have locked in for there. Right now, the average rate in the US is like 7%. I don't think people want 7% interest rates right now.
Yeah, and there's differences too when it comes to penalties and stuff. In the States, there is no penalty to break.
Yes.
But there are upfront costs. It's essentially you're prepaying the penalty upfront to take on a mortgage, where in Canada, we have lower rates, but there are penalties to break. So it's much like it's not the best analogy, but much like the good old 2-3 year cell phone contracts, right?
I feel like
in at a low rate kind of thing.
Yeah. I think the banks or the government should look at bona fide sales clause, no frills mortgages. Those to me should just go away. I don't know unless rates came down and then they were back in the 2.5%, 3%, which I just don't know if we'll see that low again. I don't know if getting a 10-year, a 20-year term is really going to be that beneficial to someone.
Yeah.
Because the way we do it, it's more conservative for the banks in Canada, and we are resetting it. And usually rates are either going down or staying the same. It's just the last 3 years of such a difference that people go back and say, why didn't I get a 30-year at 2.5%?
Yeah, yeah, they're planning to do consultations.
Yeah.
I don't know if anything will come out of it because the system is so different between Canada and US.
Oh, in Australia, the average people take 1-year terms. That's like the average thing in Australia. Every country is different, but I do know, people have blinders on and they think, oh, I wish my mortgage was that low for 30 years.
Yeah, so a few other things have come about. Alex, you want to touch on it?
Yeah, we obviously got the feds. They cut rates before the holidays at 0.25%. Again, just showing that, rates are going to keep coming down. Now, in total, they've only cut 1%, where we've actually cut 1.75. That's a decent spread. And my fear after we had that other cut that we talked about in December was what's going to happen to the Canadian dollar. And once that happened, when Trump talked about tariffs, everything that was going on, especially the instability in our government, we dipped below 70 cents. And that hadn't happened since 2002, which that's a pretty scary thing. That's even before the financial crash. Today, it's actually above 70%, 70 cents again, which is nice to see.
Yeah, we were anticipating this when we started dropping rates before the US, that it looks like Bank of Canada has chosen to help Canadians first. Of course, yes, in sacrificing the dollar, which hurts our imports, exports, and then of course it's like robbing Peter to pay Paul kind of thing. So we knew that this was going to happen at the time when they started cutting rates. I think our dollar was 74 cents at the time, something like that, 74, 75. So, yeah. And then we knew that if we cut rates fast in the US, we would sacrifice the dollar, that it would be closer to 70 or before head. But I guess we needed it at the time. But of course, there is fallout as well with a lower Canadian dollar. It means our goods that we bring in is a lot more expensive, and the money that we have, it just doesn't go as far.
Yeah, and the big thing is it's not even that. It's people don't want to invest in Canada right now. And that's, for one, they're scared of the government who's in power. And so that's where hopefully we see some more stability and people want to start bringing money back into Canada.
Yeah, it really feels, because the political climate this year, there's a lot of question marks, more questions than answers. So we'll talk about this later when we give our forecast, but that's the backdrop of our kind of predictions and such. Other news from Canada, our inflation is down under 2%. It's 1.9% in November. Of course, with interest rates coming down, housing shelter costs edges down with interest rate cuts. So that kind of goes along line with Bank of Canada killing inflation. I think we're no longer talking
only what everyone has been screaming about, saying, hey, like our mortgage interest rates are too high. It's affecting inflation, keeping the numbers up higher.
Yeah, so now we're not talking about inflation anymore. So thank you for not talking about inflation. Even as a homeowner myself, yes, rates come down 1.75%. It needs to come down a little bit more.
It's not even that. It's just everything, like the cost of food. Everything is, we can all say, hey, yay, we've hit that 2% inflation mark, but we know that everything is a lot higher than 2%, and that stuff's not coming down. The prices that we have now, like, it's here to stay now.
Yeah.
And just, I went to one store, and I think I got 7 items, and it was like $80. It was like, this is insane.
Oh yeah. Even before COVID, I remember, this is not too far long ago, but if I went on a date with my wife and we went to, let's say, Cactus Club or Earl's, they have these promotions at like Wednesday night, whatever, couples, like 2 can dine for $50. You remember those days? It wasn't too far long ago. And
minimum like 100 to 150.
Oh
now.
Yeah, easy. It's, my goodness, it's 100 to 150, and it's like even a simple dish is like $40 to $50 at not a super high end restaurant, but just like in any regular place.
Yeah.
We just want to educate everyone out there that yes, inflation is down, but that doesn't mean prices will go down. It's not going up as much as it used to. It is still going up, but you won't see it as it's not as crazy as it used to be.
That's right. I saw someone make a video on social media. They bought stuff. They had a grocery like Walmart, their cart order. They went back and looked at what it cost in 2022 when they bought it for all their groceries. I think it was like $150. They went back now and it was $425 for the exact same things.
Yeah. Yeah. I think even for us too, we've had to dial back, even though we're paying, more, we've had to dial back. I don't eat steak anymore. I don't remember the last time I eaten steak because you buy a pack of steak, like a pack
Yep.
of 4 steaks from Costco. It used to be $40. Now it's 75, 80, even 100, something like that. Yeah.
Yeah,
So
it's crazy. And that's right. I hope people like really, it's great to say, hey, we got that down, interest rates coming down. If you want to, you got to look at doing side hustles to make money in this economy now. Like and don't work 24 hours a day, but you do have to try and find another way to make extra money, because back in the day, you could get a job 40 hours a week trying to make 70K and you're going to live comfortably. That's not the case anymore.
yeah, we're in a case now that the days when I was younger, not too long ago, like making 100,000.
Yep.
Oh, you must be doing really well. It's like our goal to get
Yep.
6 figures. But now that
Yep.
if we're in that 6 figure category, I feel poorer now than when I was making
Yep.
like 50, 60, 10,
Yep.
15 years ago,
Yep.
something like that.
Yep.
But yeah,
Oh,
it's
exactly.
not what it used to be.
Yep.
So yeah, there's some other things that come down the pipeline we want to talk about in the banking world. We've talked about oligopolies and how we don't love it, but just somehow we have oligopolies in Canada. And
Yep.
will that ever change? What can we do to make it change? Like, how do we change it's like changing the constitution and changing the fabric of Canadian thinking. Will it ever
Well,
change?
it's just,
I don't know.
I don't know. I don't know like what the government looks at when they do the diligence saying, oh, this isn't making it uncompetitive. And I think about the Shaw merger with Rogers. We can go back now and every single person that used to be at Shaw and that now that's at Rogers, they're paying more money. And so how did you say that, hey, don't worry, this isn't going to change anything. It's going to still be competitive. It's going to be better. Every time this happens, it's proven that it's not better.
Yeah, yeah. Speaking of which, there's more merging here. National Bank is buying Canadian Western Bank for $5 billion. And National Bank is larger in the East, but they're looking to grow their footprint in the West. And by doing so, Canadian Western Bank, it's major expansion into Western Canada. That's great for National Bank, but it's one less lender out there. And just like how RBC bought out HSBC, it's one less lender out there. I don't even know the Competition Bureau. What are they thinking? If anything, I don't know if it's anti-Canadian. You should let international companies or US companies buy. We need more competition, not less.
Yeah, exactly. And that's where it's just, I don't know what we have this. Yeah, I'd be interested to know. And a great job for CWB, like what they've done. I remember they were like just in BC, they were a small bank and everything, a credit union that became federal. And now what they've done, okay, amazing job by them. It'll be interesting. National Bank does work in the broker channel with some brokerages, but CWB was with everyone. That's going to be going away now, which then limits the lending options for brokers as well, which just limits the options for clients.
Exactly. We all said that more options means more competition means better for consumers at the end of the day. But this does not help that narrative.
No. It's yeah. We'll see. And that's where we're really, I just find like the government they're just doing everything in their power we're not going to reduce home prices. I want to make that clear for people. Like home prices are not going to keep coming down for much more from where they're at now, but they're doing everything to try and limit them increasing and try and make people not make a profit. And that's in BC, effective start of January 1st, we have the new flipping tax that applies in BC. That's on top of the capital gains as well. And it puts a pretty big damper on someone that, say, bought a house, did some work on it, and wants to try and sell it within a year.
How much is that tax? Do you want to explain the details of it?
Yeah. So this one, I have a bit of understanding. We'll talk about some of it. We definitely want to, I would say, bring on an accountant here. I think that should be like one of our next podcast interviewers there, Alex, to really help us go over some of that. But so the way it works is in the first year, you're going to be taxed at 20% on that net income that you would have from it. Now, let's use some easy math and say, hey, you gained 100,000. So you're going to get taxed 20% on that 100K. Now, the way that capital gains usually works is you get taxed on 50% of the gain at your marginal tax bracket. So in my head, I don't know are you going to get taxed at the 20% on the 100K? Are you also then going to get taxed at the 50,000 at your marginal tax bracket? Or does it say, okay, we're taxed you at 20% of the 100K and then it's going to go down from there? That's where in my head, I'm like, there's a lot of freaking taxes on here.
Yeah. Because the flipping tax is a BC thing, whereas the capital gains is a federal thing. Yeah, it would be good to have an accountant to talk about, are we going to get taxed on tax or however that's going to work out.
It's the first year you're taxed at the 20%, and then every day after that, starts to reduce on a sliding scale.
Yeah.
Now, of course, there's exemptions like divorce, separation. There's things that way where you can still, if there's a real reason for it. I'm personally fine with this in there, because what they're really going after is they're going after the mom and pop contractors that are buying houses, that were building them, selling them. Some people were making $1 million of profit selling them, go and buy another place, live in it, work on it, flip it. And so I'm fine with that. I don't think it's a horrible thing. It just, at the same time, it limits people that maybe buy the condo, they want to live in it, and they're like, hey, my income's increased, I'm ready to go to that house now. They now may be incentivized not to do that because they're going to have to wait for the 2 years, and maybe home prices increase, and now they can't get into that house.
Yeah. Especially with first-time buyers now who buy something just to get in and soon realize that they bought something that's too small and they can only afford for something. They're going to have to stay in it for at least 2 years and not get taxed, or just bite the bullet, pay the tax, and your life goes on anyway. The saying is true in life. There's only two certain things in life: death and taxes. This kind of adds to that narrative.
So we'll see in that one. I'll be interested to hear more as we talk to some accountants and stuff, and we'll try and get some more information for people.
Absolutely. So we talked earlier about now there's no stress tests when you are switching lenders, uninsured switches. Mortgage amount stays the same, amortization amount stays the same. One lender has chosen not to follow it. It's BMO. So BMO is still applying the stress test for uninsured switches. And I wonder why they decide to do that. Like, they not want the business, or I don't know.
So my thoughts, Alex, the reason for this I can see. So there's some different banking rules that kind of actually got pushed. They were meant to come in effect this year for like how people were going to qualify. Right now we have that stress test, but they were also going to talk about a loan to value amount, meaning you cannot go above 4.5 times. Now banks, when they get uninsured mortgages, they have to balance their books. It's not the same way as lending on insured mortgages. And so my thoughts on this is a lot of these banks may not want to take some of these mortgages on. They may be actually, to their minds, too risky, and they can qualify because of that no stress test. But they might say, hey, you know what? I don't want these on my book, because when this new, I think it's Basel, I can't remember exactly, when it comes into effect, they're only going to be able to lend out X amount of money in certain ways. And they're going to have to like bucket all of their funds. And this could be BMO saying, hey, we don't want to take on any other risky mortgages potentially.
Yeah, I can see that as a way for them to limit their exposure in their book.
Yeah, they just get more control over it. I can still, like, obviously they know that people are going to come to them that qualify on the stress test. They're like, hey, we qualify, we're fine. And so the other ones, it adds a little bit to them, potentially too much risk. And that's where if you've got a mortgage from a provincially regulated credit union, certain lenders are not taking them either with that no stress test, because credit unions, they're provincially regulated. They're not federally regulated. So they can actually already do a no stress test. They may have someone may have got a home from them, already be above the norm. Now they're going to go to a bank that, again, if they didn't have that stress test, maybe they qualify, but with it, they don't. And right now the government went and reworded stuff in the bill. And yeah, provincially regulated credit unions you can't do the stress test, the non-stress test transfer. You can't switch out of them.
Yeah. So every situation is different. So talk to a mortgage broker, about your situation, if that stress test applies to you or not. All right. We're nearing the end of the show, but this is our first episode of 2025. We want to talk about the forecast, what we think this year has in store for housing and interest rates. Who wants to go first? You want to go first, Alex?
I'll do it. This is an interesting one. I'll be interested to go back here next year to see what it was like. So I'm going to go for my housing forecast, let's start with that on prices and stuff. I think over the next 2-3 months, we're going to stay stagnant. We're not going to really see an increase in prices at all. I would put money on it in the springtime. Many places are short in supply right now. They're below their average. I can see us going back into some bidding wars and stuff, and prices increasing. I'm going to go with, let's say, a BC average. I'm going to go 2%. That's, to me, the prices all across BC on average will go up maybe 2%. We know the norm is quite a bit higher than that. And so that will be my housing forecast. Interest rates, that's a tricky one. I feel like we were talking about before, we actually were lower a couple months ago on the fixed rate side. We've actually increased now. Could this be where fixed rates stay? Is this like where the fixed rates are? And do we see maybe variable rates go down a little bit lower, which again is the norm? Usually variable rates are lower than fixed rate mortgages. And so I think by the end of the year, we'll end on average. Most mortgages will all be with a 4 under. We'll be at like 4%, maybe some mortgages at 3.8, 3.7. That's my guess.
Okay. All right. So my housing forecast, similar to yours. I'm just talking, we're in BC, so I know more about BC. I think we're going to see, in terms of housing, a little bit of a dual economy. Condos it's going to be pretty tough because there's a lot of supply. You didn't talk about pre-sales, but pre-sales, it's going to be tough for a while, especially where we talked about people buying in the peak and completing this year. So we're talking about high rises bought in 2020, beginning of COVID or during COVID, and completing. So they bought at the peak values and they're coming into completion now and they're not appraising for the value that people bought it at. So people are going to have a hard time getting mortgages because the banks will only lend on the lower value of the appraisal and they have to come up with a difference. And a lot of people don't have the money for the difference. What the choice they have, they can't even get a private loan or whatever. They can't assign it because no one wants to buy it at that value. So they're going to take it up. They're going to take take a haircut and just take it as a loss or give it up. And if you give it up, it's not just losing the deposit. You're going to be allowed to be sued by the developer. The developer will win every time. Yeah. So pre-sales are it's going to be pretty tough for pre-sales. Even in the condo market, a lot of supply. I see values probably going down a little bit on the condo side because there's a lot of supply. In terms of single family homes, I do agree with you on that part because governments are not, because in Vancouver, probably Toronto is too, we're not building more single family homes. The whole trend is to build more density. Yeah. And so, which creates scarcity amongst single family homes. So I do see single family homes. It's not going to go crazy. It'll probably, you're right. Not 2%. I would say more of a modest gain, about 5% this year on the single family homes. For townhouses, probably flat because a lot of times people who buy townhouses are move-up buyers from a 1 or 2 bed condo to the townhouse. If you can't sell your condo, or you sell your condo for less than what you think, then the amount that you can qualify for on the townhouse will be, muted a little bit. So I see it flat on that part. Interest rates, that's an interesting one. The forecast from the banks was around 0.75 to 1.25% more in cuts. Yeah, I would say on the variable side, the prime, 1% more in cuts throughout this year. Economy-wise, despite the whole political landscape, last time we checked, unemployment was at 6.8%, and there's no signs that'll change. We'll see another 1%. That's my prediction, 1% in variable cuts. Fixed rates is a little bit different, where I do see a 3 handle in it. Are we going to go as far as 3.5? I'm thinking more of a 3.75 to 4% on the 3 to 5 year fixed range. Yeah, that'd be good to see variable finally being below fixed again, where it traditionally has been. And the last couple of years it hasn't, because the pendulum has swung back the other way, and now it's the whole settling back down where the average has been. So that's my prediction. Yeah. It's going to be an interesting year.
We'll do a 6-month follow-up and go back and see what our projections are looking like.
Fantastic. I think that brings us to the end of the show. Thank you for listening. Again, 2025, this is our first episode of 2025. This is episode 18. On behalf of Alex Shanks, I'm Alex Pang. Thank you for tuning in. We'll see you next time.
Talk to you soon.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.